Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A big bearish or long black Mariposa yesterday, and an impressive continued, though delayed, follow-on lower to the recent shooting star pattern type 1 bearish. The previous session's doji cross with a very long tail did not quite fulfill the bearish aspirations of the market, it seems. It was also a reassertion of the bearish importance of the two newly reassigned overhead downtrends. The 2008 to date move currently at 122.58 and the 2011 to date move currently at 122.59. So we now know that the recent April to May bull channel's influence is over. The current March to date uptrend, currently at 121.83, is also dead and will be removed, retired. So what do we have below? Well, there is the old neckline from the January to February reverse head and shoulders pattern, currently at 120.86, but this does not really cut it. There is a lesser recent 38.2% Fibonacci line at 120.63, but I suspect the real power below is at the flatlining medium moving average, currently at 120.38, especially as it's flatlining, which is rapidly being aided by the rising short medium moving average, currently at 120.27. This is why yesterday's close in the 121.20 area is not necessarily that important. I suspect it's out of exhaustion rather than halting at a technical level as such. So far today, further move lower. Prices are now approaching the neckline support, however limited that support may be. Cable, aka sterling against the US dollar. A third countering key reversal down and bearish engulfing pattern yesterday. Though this is an impressive third counter, it still left some questions open, plus some possible new opportunities. You see, on the face of it, it was a big move down. But what did it really achieve? All it managed to do was cement the validity of the overhead resistance from the March 2018 high at 142.43, something we already knew anyway, and it dropped down and closed below the combination of the 141.43 support, now resistance, as well as the close by flatlining short moving average. Those last two things, that was all. You see, the next key support is the 140.75 level, and that halted the decline, and what we had in effect was the market moving around and in between the well publicized trio of resistance and occasional supports of 140.75, 140.143 and 140.243. Okay, that's enough bear baiting from me. Let's now look at what may be an opportunity. The action yesterday, along with Tuesday's action, has set up this market for a possible weekly key reversal for this week. If we close tonight either over 140.190 or under 141.45, then we'd be on. Anything in between and would have the lesser outside weak pattern. Right now it's looking like it might be a weekly key reversal down, though things may change. In the bigger picture, this is just the latest series of moves in how the current bullish forces, evident since September of last year, still battle and rub up against the latest challenge seen overhead. Those three, the trio of overhead resistances. The market indeed still continues to travel higher between the lower time below, currently at 139.17, together with its long-term partner, medium moving average currently at 139 even, and its short-term partner, the short medium moving average currently at 139.45. Whilst above, we also still have the middle time currently at 143.76. Both times are from the June to September 2020 bullish shift pitchfork. Please always remember, this pitchfork has given the bullish angle of attack of this market since September last year. So far today, a cautionary dip towards the 140.75 support, but then a pullback upwards. We still have the 141.43 resistance overhead, along with that short moving average. Euro sterling. A second bearish black crow yesterday, and a suitable follow-on lower to the previous session's bearish harami. Also a close back below both the short medium moving average, currently at 86.22, from which the market hung its action from yesterday, as well as a short moving average currently at 86.08. This move lower has been prompted, as I have repeatedly mentioned, by the rapidly descending medium moving average currently at 86.63, which is now well below what had been the previous overhead resistance, the April 2020 low at 86.69. Meanwhile, further down, we still have the extension of the flat trend line from the March-based descending triangle at 85.45. Now, I've spoken for a while now about the smaller pattern emerging, a possible small bear flag pattern over the last 3 or 4 weeks. Nothing was certain on this. However, I suspect the idea for a bear flag may now be morphing into another possible pattern, a roof pattern, sometimes known as a half diamond. And that's for the action from the start of May until today. So, taking this further, I've had a preliminary target X for the bear flag for some time now in the 85.20 area. This will now be amended to be a possible downside target for this roof stroke half diamond pattern, and it will be moved just a little bit to the 85.25 area as a result. I could also put a preliminary target for the upside, as these patterns can break in both directions. However, we have not as yet had a break up and out of the downtrend for the roof, which is currently at 86.34. However, I can give an idea of the size of the break should it happen, when it happens. It would be 55 ticks on top of the break of the trend line, so if that happened today, it would be in the 86.90 area, even though I have not marked it on the daily chart. So far today, a further follow-on lower, down towards the recent lows. US dollar against the Indian rupee. No follow-on yesterday to the previous session's shooting star pattern. Instead, an indecisive spinning top. The market is still, unsurprisingly, capped by the flatlining medium moving average, currently at 73.28. And just above that, we also have the flatlining long moving average, currently at 73.47. This has been the first pause in the recent reversion back up from the failed attempt to break down through the congestion zone below, stretching from the 50% Fibonacci line of the July 2019 to April 2020 move at 72.64, down to the February 2020 high at 72.05. Now, it is worth noting that a pullback up may move as high as 74.40 and still keep the bearish incentive. However, there's a lot in the way between there and here. So far today, well, not much really. We're looking like another indecisive pattern, now possibly an indecisive doji cross, just smaller than yesterday. US dollar against the Brazilian real. All I can say here is yes and thank you very much. A sixth bearish black crow that reached down through target X1, the full target for the recent sideways triangle, at the 513.80 area, and then dropped down to reach target X2, the target for the oft mentioned and talked about recent bear flag pattern. All this coming after the weekly key reversal down last week. I now have to start figuring out what will be next. As a preliminary idea, I have placed the target X3 in the 482.80 area. This is very provisional and very preliminary target for looking at the whole mid-April today action being a possible bearish halfway hesitation pattern. More on this as it develops, if it does. US dollar against the Mexican peso. A counter to the counter bullish engulfing pattern and bullish long white Marabozo yesterday. It may be a crucial moment yesterday as the market punched up and over the resistance combination of the neckline from the February to April head and shoulders top, currently at 20.0237, and the recent May base downtrend, currently at 20.0059. And they were roughly where they intersected, which I found very interesting. This takes the market away from the possible targets below for the two head and shoulders tops seen earlier this year, which I said I would review and which I have now decided to retire. As a final interesting point on yesterday's action, the market punched and closed over the short medium moving average, currently at 20.0909, but it slowed and halted ahead of the barely rising, and that's something to watch if it's flatlining or barely rising, medium moving average, which is currently at 20.0909, where it slowed and halted. 23.30. Please remember, this medium moving average halted the rise at the end of April and the beginning of May, and it did it twice when challenged, so it's not to be treated lightly. So far today, higher open and a cautious attempt to try higher towards the ominous resistance of that medium moving average overhead. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.